Hi, and welcome to the Market Alert for Tuesday, the 19th of April 2022. So let's catch up over the weekend, see what's happened amongst the markets. Of course, the cryptos continue to trade over the weekend. And then yesterday, the US was open for normal trading hours. Europe was still closed. Commodities soared as bonds, stocks and Bitcoin roller coasted wildly. A chaotic and illiquid trading session with Europe still closed. Gold topped 2,000 as crypto correlation crashes. Gold has been an inflation hedge for millennia. It would be if they were allowed to let it move to the upside, but they're still suppressing it. Stagflation fears soar as World Bank slashes global growth outlook. The decline was spurred by a cut in the outlook of Europe and for Asia as well, which includes Russia and Ukraine. Notice how this has been tagged on there now. It's going to be used as the excuse as the global economy implodes. Oil spikes, raises Biden SBR benefits. Now what? Well, get back to work, Joe, is the sub-headline there. Goldman trader, the best days are behind us, and we've never seen a setup quite like this before. How we are not headed towards a scenario where the Fed will be forced to tighten into a slowdown. The trajectory we're on is a photographic negative of Goldilocks. So disaster ahead. Chinese lockdowns expand, raising more questions about Beijing's motives for shutting down. Absolutely, is it a case of they're going to shut down to create even more of a supply problem? Because according to this subhead, growing lockdowns in China have me believing more and more that the country isn't exactly crestfallen about the supply chain crisis that it is creating for the rest of the world. Again, this is just adding to inflation. More news. Let's have a look today. Well, we haven't got any today, but tomorrow there's just existing home sales, and then as we get into Thursday and Friday, we get the big guns. We've got all three central bankers speaking on Thursday. And then it's flash for Friday, but we've still got ECB and Bank of England governors speaking. And we haven't got Fed chair out, have we? No. Friday, Thursday, big days. We've got the central bankers speaking. I wouldn't be at all surprised after the inflation increase last week in the UK that Bailey doesn't come out with a surprise interest rate increase as well. So let's have a look at the markets for yesterday and Friday. The market moving higher on Friday to 89% in the Dow, and then down yesterday, but managing to come back. You can see that we've got a defined range at the moment for the Dow and also the Dax. So it's up to this now to decide which way it wants to break out. But yesterday, fairly quiet, market down. You can see there that it's retraced from there to there. It came down to 78%, and that was the low. And then the market managed to bounce off that. And overnight, you can see the market still sideways. Let me just change the colour to blue because I think it's easier to see. We've come up, come back. DP is very important that the market holds at this level. It's not doing a lot at the moment, is it? So obviously waiting until the 7 a.m. futures open. Really quiet overnight. Yesterday, a bit of a move to the upside, then back, became oversold, then moved back 78%, then moved back over 100%, and then moved back again. So very choppy during yesterday's trading session for the Dow. In the DAX, again, you can see that we're in a sideways range here, very quiet. It's obviously electronic only yesterday, but a lot of volume nonetheless, holding the market in its sideways range for yesterday. Overnight, market is down a bit. In the 30-minute chart, you can see this is already traded below. The DP became oversold, two lots of demand. We've got a crossover and then moving back to the upside. Again, it's dependent on the futures at 7 a.m, which is going to be another 10 minutes away. So these are the upside targets for the DAX if it continues to move to the upside. If not, and we start heading south and it doesn't hold when the futures open, then obviously the area here after 89, this low to the left, is going to be very important. Then here the S1, and then of course the magic of yesterday's electronic low will come into play. In the currencies, we'll have a quick look at those first. The yen continues to charge ahead. As I said all of last week, the effort that the Bank of Japan went into to try and tamp down the currency failed miserably. The market now moving sharply to the upside there. You can see that ploughing ahead, and this is being put on the overnight market where we see we're already at the R3 for the yen. This means the market's likely to find a bit of sideways support here and just sort of levitate and trade sideways at the R3. That tends to be the picture there, unless of course the pound continues to move lower, which we've seen over the last few days as well. Here we've got an 89% retracement. Yeah, we're just on it there. Bank of England governor not speaking until tomorrow, so don't discount the fact that he might not come out and actually increase rates because of that 7% inflation figure we saw last week. He may do that just to surprise the market, which will send the pound higher. You can see here that the pound moved up in anticipation of it when it was announced on the 13th of April, and then since then the market's drifted lower because obviously Easter and no sign of Bailey. But if he does, then you'll see the market move to the upside. And in the 30-minute chart, you can see that it's trying to hold support at the low and the S1. We've got a bit of demand coming in there, so we're starting to see the trend move to the upside there as well. And in the metals, silver was allowed to move up yesterday. It got absolutely crushed in the afternoon. Let's have a look at the 30-minute chart. There you can see it was able to move up, and then when we got the US market coming online at 2, this is 2 p.m. this bar, the selling came into the market, and then they just absolutely hammered it. As soon as the COMEX opened, it was sent lower. No surprise there is that as we look at the daily chart, all of the other commodities now making record highs, including all of the metals apart from silver, which, my dear friends, you can still buy for 50% lower than 1980 and 2011. It's still available at these discounted prices. Yeah, incredible, isn't it? So silver needs to hold above the 5-bar moving average. We are overbought and we have got some divergence, so I wouldn't be at all surprised if we don't see an agenda to try and crush the price and get it back down because of how short most banks are on this silver market. So yeah, 62 needs to hold there as well. In the gold market, this moving higher. Apparently it touched $2,000 yesterday. I don't think it did on ETX. It may have done on other platforms that it's $2 shy, but on the COMEX, which is the global authorized market for the paper gold market, it hit 2,000 yesterday. And you can see again this was moved back to the downside rather pronto. Anything to keep it below 2,000, major psychological level for this market, so it'll need to be kept below this. As the last time as the market got up to what was it, 27 was it? 70, 27. I knew there was a 70 in it. 2070. This only being March the 8th was well and truly monkey hammered back down, retested, and brought back to have a look at the 2,000 area on the COMEX yesterday. Meanwhile, the dollar continues to move to the upside, which is quite amazing, really. We need to look at the monthly chart on this one because we're going back to the 103 level, be the first thing that happens before silver's allowed to take off, that's for sure. You can see it moving up strongly there as well. So keep an eye on the dollar index and this 103 level. Be interesting when it gets to that price. And meanwhile, crude continues to move higher as well. This has moved up from a low here of 90, well, say 99, up to high of yesterday where we've seen $113 per barrel. So we're back 62.78 from here back to here as well, and just coming into overbought territory. The market needs to stay above the 5-bar moving average in 20 in order to continue its move to the upside, which hopefully it won't, because we've got enough with inflation coming down the line with China and all the other increasing costs that we're seeing that have been created through supply shortages. And next, like I say, and then it's all food prices, etc. as well, and increases. So there we go. There's a quick roundup of what has been happening over the last 48 hours. That's Friday and Monday for the US. So let's see what happens today. And with that, I will sign off. And as ever, thanks for watching. See you in the next